Motivated business owner, welcome to the Small Business Big Marketing Spotlight. I'm your host, Timbo Reid, and today's bright spark is Mike Paulus, the founder of two businesses in the FinTech sector. One has $7 trillion, that's with a T, dollars of assets on its platform. The other, he bootstrapped, then sold to Prudential for 2. Mike now runs PCM Encore, a family business that manages his own assets as well as those of other families. Mike, welcome to the Spotlight.
It's great to be on. Thank you for having me.
I'm looking forward to this conversation. What's your secret to bootstrapping a company that gets sold for billions? There's got to be something.
There's a couple. The first thing is I love bootstrapping, but it's only right in certain industries. My first company, Outapar, we were building software and we were selling it as a subscription. And SaaS businesses are hard to bootstrap. That's a business that we've raised several $100 million. It's worth $3.5 billion. So it's been a good investment, but it certainly wasn't bootstrapped. And it's a business model that didn't really allow itself to bootstrap. Same with my pest control company. We spend about, a year and a half to 2 years of our revenue to acquire a customer. They stick for a long time. Great business, not a great bootstrap business. The secret really with Assurance was, as a broker in the insurance space, you're paid up front by the carriers. And it gives you a chance, right? If you have the right economics and you're profitable on your acquisition and you run an efficient business, the cash flows match up. So the first thing is there's some businesses that really lend themselves to bootstrapping. There's others that don't. I actually love both types of business, but be in the right market, understand those cash flow and payback dynamics. After that, you've got to be so focused on the customer. I'm obsessed with the customer. And the nice thing about a bootstrap business is the customer is the only place cash is coming from. And in a way, if you compare yourself to a venture-backed business, you have some disadvantages as a bootstrap business, right? They've got more resources. Maybe they've got more hype. They can spend at a loss. The one advantage you have is you don't have to worry about VCs. You don't have to worry about looking sexy. All you have to worry about is making your customers happy. And it's your biggest advantage. So stick to it. I think when you're building technology in a bootstrap business, you've got to be laser focused. And for me, it was basic. Did it improve our unit economics? Did it improve our efficiency? Or did it make our customers happier? And if it didn't do one of those three things, it's out. And I think too many things get built just to look sexy. And nowadays, everyone feels like they need AI. There are use cases for AI, but are you doing it for something that has a clear business payback? You've got to be laser focused when you're bootstrapping there.
We're 4 minutes in and the AI acronym has been mentioned already. We'll come back to that. Tell me, the bootstrapping thing and customer focus, so many business owners aren't. It's incredible. As you say, I think you said before, that's where the money's coming from. Customer focus to you and your businesses, what does that look like? Because we've heard from people, like the late Tony Shea from Zappos, total customer focus to the point of giving his people on the phones in the call center a $200 budget without approval if something goes wrong. I mean, that's beautiful customer focus. What does customer focus look like to your businesses?
So I think the first thing for me is it's got to be measured, because what business says I'm not focused on my customers, right? To your point, it's almost table stakes. But the question is, are you rigorously measuring NPS? And are you pushing yourself to improve it every single day? Is your compensation of your employees directly tied to things like that? Are you obsessed with your attrition data? And do you measure yourself by how you can improve attrition? At Hawks, our pest control company, we've halved our attrition, halved the number of people that cancel. And it was because for the past 4 years, we've measured it. And if you look at our investment and our focus, it has been obsessive around making our customers happy. So I think you master what you measure. And to make customer focus not just a platitude, but a reality, it starts with having really honest measurements. And then I think the other piece is, you've got to be self-critical, and we all like to say, we've got great customer experience. Internally, you've got to put your hat on and say, where are all the places that we're screwing up? Customers were waiting too long. Like, that wasn't a good interaction. Are you listening to your own customer service phone calls? And the only way it gets better is if you've also identified all the areas that you're breaking down. So I think measurement and being self-critical and making sure that your compensation is aligned there as well. And when we say we have great customer service, is that just because that's something that we'd like to feel, or can we rigorously measure that and be honest with ourselves?
So true. So true. There's a great example of a fellow I worked with many years ago. You talk about, listening to customer phone calls and seeking all their feedback, and et cetera. This fellow ran a business for CEOs of large FMCG companies, and they would pay him good money to sort of be their behind the scenes coach. And these people were earning, high hundreds, if not millions of dollars a year as CEOs. And the very first thing, his name was Kevin, the very first thing Kevin would do was take them to the supermarket aisle where their products were sold and have them stand back in jeans and a T-shirt so they weren't obvious and watch people buy or not buy their product and then go up to them and ask. That's customer focus.
Absolutely.
Yeah. Yeah, it's beautiful. It's just not enough businesses do it. Your ventures share a common thread of solving overlooked problems. I love this. How do you go about identifying an overlooked problem?
It was interesting. Early in my career, I was at Excel, the famous venture firm that backed Facebook and others. And a partner there, Brian O'Malley, gave me advice that stuck with me to this day, which is fish in your own pond. It just resonates. There's probably not a week that goes by that I don't think about that. And I think what that means is it's so easy to get carried away with whatever VCs are doing or whatever's hot. And to me, it means be creative, look out there for different problems. So in America, a lot of it means to me is look at problems the rest of the country has that are overlooked in New York and Silicon Valley. At Assurance, we wanted everyone to be able to get really good, affordable life insurance. That wasn't a problem for a wealthy VC in New York or Silicon Valley. They had great life insurance agents with them every day. It was a big problem for someone in Indiana or Texas or Mississippi. Same with pest control. It's a massive industry, multi-billion dollar industry, but it's not that big of an issue in the Bay Area or New York. But in Atlanta or Dallas or Houston, this isn't a luxury. This is a necessity for customers. So that's one piece that I love, looking at problems that are not sexy in the investment capitals, but are real problems for everyday folks. I also love to go after industries that have B or C customer experiences today. Why try to beat Amazon? They're great. And are you making the world a better place if you beat Amazon? It's already a pretty darn good customer experience. Let's go after these industries where no one's really happy, where there's a lot of friction. That's where there's opportunity to improve things. And then I love businesses that have the opportunity for repeat business or subscriptions or things like that. If we're going to have great customer service, are we going to get rewarded for it? If you run a plumbing service, someone calls you, there's an emergency, you repair. Even if you do a great job, the odds that they have another issue in the next year they call you for. So it's a good example where you could have great customer service, but you're not going to be rewarded. My businesses tend to be recurring. If I sell you the right insurance policy, you're going to keep that policy for a long time, and we're going to have those economics for a long time, and you're going to come back to me and need something else. If I do a great job serving you in pest control, you're going to keep me for many, many years. So if it's hard to invest in customer service if you're not actually also rewarded for it. So that's another piece. There's one piece I'd say, go fish in your own pond. And I think especially young entrepreneurs, just because they have not a big breadth of life experiences, they tend to focus on the same few industries. And that tends to be where there's a lot of competition and probably less opportunity.
Yeah, very true. Do you have any young entrepreneurs come your way in terms of seeking mentorship or just, got a question for you, Mike?
Absolutely. And that's both just smart young people who I love to help, or, we've had $4 billion businesses built from people that have worked for me, and, many businesses worth over 100 million or less. So I also think if you've got great talent, I want to give them a path that they can work with me forever. And I want to give them the tools that if they go off on their own, I can be their first check and support them in their next chapter as well.
Mike, you mentioned AI before. Let's go there. We're at the 10-minute mark. I find myself, and it's only and many I do, I guess, only the past 12 months or even less, thinking about business ideas, but then very, very quickly thinking, you know what? AI is going to do that. There's no market there. As an entrepreneur yourself, with your fingers in many pies, is the AI filter high up now before you decide to go into something?
So it's interesting. I think there's a theme of automated businesses and data-driven businesses. And it was automation for a while, and then we were calling it data science, and now we're calling it AI. And I think that the theme of how do I take a business, and how do I make it and how do I make it far more efficient? And for me, it's man-machine symbiosis. It's throughout everything I do. Even in pest control, you would think, how can you bring technology there? But it's a routing problem fundamentally. And we've gotten our technicians to do 30 to 40% more stops a day. We can get to more customers. We have better economics. We have happier customers. We have an app that drives them through exactly what they do to get what do they spray for a customer? What does that customer specifically want? We've made them more efficient. So I think that this theme of how do I build efficiency into my business? How do I give self-serve paths to my customer? Those are big win-wins that will go across the board. How many of those are large language model AI problems? How many of them are just integrating? How many are more classic data science problems? But it is a lens. And what I tend to think of it is as more of an opportunity. And I think if you can come at any business that has an opportunity for technology investment, and that's one of my pieces is pest control was interesting because I could bring digital acquisition to it. We could route better. We could have happier customers through bringing technology into that process. As I look at wealth management, our ability to look at portfolios, make better recommendations, invest better day to day, all of those things are influenced by technology. So for me, if there's not an opportunity to bring technology in and improve things, it's just a lot less interesting. I think that the industries that will be most attacked. No, I'm on the board of Entra, which is a very large FinTech company that does a lot of routine legal work for the biggest private equity firms in the world, amongst others. We are right in the crosshairs. That sort of routine legal work that large language models can really impact. Mm-hmm. So on one hand, it's a risk, but on the other hand, we have dove in head first. We've got an incredible tech team now, and we're leveraging AI in remarkable ways. We're really transforming in many ways from a service to a SaaS business. So I think if you're savvy, you actually want to be where the AI disruption is, because that's where you're going to be able to take market share, get margin, delight customers. And I think usually, Australia's a big country, so is the US. These are big enough markets that I'm not thinking about one or two competitors or that the market just won't exist at all. I'm thinking, how can we do a great job with our customers and execute? So I like to be places where I can bring AI or similar tools to bear.
Well, you're a glass half full guy, obviously, around AI. Just personally, Mike, what are you using AI in your everyday? How are you using AI in your everyday life? Like, what are you using? ChatGPT? Are you using Grok? Are you using what's your preferred?
It's interesting. So in our legal business, analyzing documents, being able to intake documents, understanding commitments for our partners, it's been remarkable how quickly AI is doing that equal or better to human. It's probably the most direct application that I've seen. I think within our wealth management business, our ability to understand what's happening on calls, make sure those are all translated into structured data so we're not missing anything for our clients, and we're making sure that we're holding ourselves accountable. It's been a remarkable use case. Personally, I think ChatGPT can help with a first draft of something, or it can help give me some vacation recommendations. I think when you achieve a certain level of expertise and mastery, it's AI is a little more meh. When I really get to the nitty gritty of the expertise of investing or tax efficiency, that's where I think even the most advanced tools just aren't quite there yet. I think they'll get there, by the way. And I think the other piece is these tools are basically trained on the internet. In my experience, when you're running a pest control business or you're talking with someone about their finances, it's nice, like it's all the things that you could Google, but it's those signals that you're picking up that are not obvious. Something in a customer, something you're picking up from a branch manager, or something you're picking up from a customer in their conversations about retirement. So I really believe in this idea of man-machine symbiosis, and this expert human is going to play a really key role, and I think a bigger role than we understand in these industries, and especially in things like investing. It's not just about the ideal portfolio. It's about giving you peace of mind that you've got a partner. It's being able to talk about your goals. It's how do you sleep well at night. So I really believe in this concept of how can we use things like so that all the routine legal work or routine work that people don't like to do anyway is taken care of. How can we create processes so we just don't make the mistakes as humans that we make? And then how can we keep that unique human touch and really amplify it for our customers?
the $64 million question. If you're finding this chat with FinTech expert Mike Paulus illuminating, then you can access all episodes of the Small Business Big Marketing Spotlight on your favourite podcast app. Mike, your business philosophy, or one of them, is about identifying inflection points and then accelerating. Can you explain what that means and maybe give an example or two?
Yeah, it's a great question. I think too often folks try to create inflection points when none exist.
What's an inflection point?
So I think an inflection point is when the business is clearly ready to double or go 5x or go 10x. And I think you see it where you say, my economics are good, my systems are stable, I'm really good at what I'm doing, my customers are happy, and I see a channel where I can grow. And when all that is together, let's go. And I think what sometimes happens is people think, gosh, all businesses should grow. And maybe 3 or 4 of those things aren't hitting, but they're still pushing growth. So I think Hawks was a good example. When we got involved in Hawks, it was a $20 million a year company, but they were really good at what they did. Their customers were very happy. They had successfully gone to multiple branches. They had a door-to-door sales model that was working really well, and they were ready to grow. That an entrepreneurial young team, we could come in and say, hey, let's invest technology and an investment behind that door-to-door model. And we could see how you could 5 or 10x it, and it was there. And then we said, hey, we know a lot about digital marketing and acquisition. Help us bring that expertise in, because you already know how to serve your customers really well. You've already got a differentiated product. So let's see if we can't bring this in. It's a good example of a business. And it was interesting. They also had the opportunity to sell, and that they would have been a $20 million revenue success story. Now we're well over $100 million of revenue. So maybe the piece I didn't talk about is, do you actually have a founding team and partner that wants it? I think everyone might say, I want a really big business, but there's a lot of stress associated with that.
So the idea of an inflection point, there's a lot of business owners and entrepreneurs listening to this. Is it as simple as them making sure they have a dashboard that has key performance indicators on it, and knowing that when certain of those KPIs reach a milestone, that's an inflection point to then double down on? And by accelerating, you mean up your marketing spend, employing more sales staff, whatever it may be. Am I on the right track there?
I think you are. So I'm obsessed with metrics. And I think even at a small level, you've got to instrument your business. And if I had a checklist, I'd start with my actual unit economics. Am I serving, is each job cost effective? And oftentimes people are not measuring that correctly, and that they think they're running a profitable business and they're just not. So making sure you've got really strong unit economics. And then you look to your customers and say, are my customers happy? Am I profitably serving a customer in a way that they're happy with? And then you go and you say, okay, let me look at the margin in those unit economics. What do I have that I could actually invest in growth? And if you've got 20% margins at the unit level, you're not going to have a marketing budget. By the time you cover your overhead, you're done. So you've got to find ways to drive 50, 60, 70% margins at the unit level so that we can really afford to grow and market and expand. So I think once you have all those things ready, then you've got to look at your systems and say, if I was to take this role from 1 person to 5 persons, would a bunch of things break? So making things systematic, looking at those things, hardening things, I think that's kind of the other check. And then understanding the channels. So you hit it. So if I spend a bunch more marketing, are they going to check out online? Am I driving calls? Who's going to handle that? And it's funny, I think before people grow, sometimes they just forget I actually need a recruiter and someone to grow. And I think a lot of people they think, if I want to have X in sales at the end, I think sales is a good example because so many startups miss their sales forecast. And what I typically see is they're like, I'm going to have 15 salespeople in the second half of the year. They're all going to hit their numbers and we're going to hit our numbers. And it's like, well, first of all, you're probably going to need a couple of recruiters to hit that, whether they're internal or external. Like hiring 15 salespeople is no joke. That's probably going to be a 6 to 12 month process. To get to 12, you're probably going to need to hire 20, 25, 30, depending on, the numbers. It's going to take them all probably a year before they're getting anywhere near your quota. So just being realistic around what that funnel actually needs to look like to hit what you want to hit is sobering for many folks.
Mike, you are a successful businessman who is obsessed with numbers, self-confessed. If you're an entrepreneur that isn't obsessed with numbers, Are you setting yourself up for failure, or is there another way of doing it?
That's a good question. I think being part of a business owner is understanding how to read a balance sheet, getting yourself educated on that, understanding. It's almost like saying I don't want to learn how to read, but I want to be an author. I think it's table stakes, and I think too many people are thinking, "What is my passion?" And I'm going to go build a business on that, and they're not understanding. First and foremost, I'm a small business owner. So you can get mentors that can help you with that. Find a
Yeah.
strong CFO or accountant, internal or outsourced. You don't have to, be obsessive in the details, but you have to understand your business and what makes your business run. I think that's really important. And I've seen too many great, passionate people fall short because they just did not want to get into the numbers and untangle it. And look, there's a few exceptional businesses out there, the Googles, the Microsofts, where you have a monopoly and you've got 98% margins, and
Don't worry about your numbers.
you can be a little softer. For 99% of the rest of us, you've got to grind out your business by driving efficiencies at every step along the way.
We're sort of leading into my next question, and you've half answered it, but you've spent a lot of money on online marketing. You've built a lot of businesses successfully. You've been through the mill. The entrepreneurs that are listening, I would argue mindset's incredibly important. Sure, you could give us some tips around how to manage your Facebook advertising or whatever it may be, but I would argue that that's all very much learnt. And from what I see, mindset and the way a business owner thinks about taking their dream into a reality is very important. Do you have a sort of a critical mindset tip for budding entrepreneurs?
I think considering how you make your business 1% better every day. I think everyone thinks there's some big leap and it's really about grinding it out. And you talked about marketing, and that's how I approach marketing. Very rarely do you ever start a new marketing campaign and it works. Am I losing a little bit of money or a lot of money? And then
Yeah.
you're changing your creative, you're changing your ad, you're changing your flow, you're changing your scripting, how you handle, you're changing your follow-up. And then you sort of earn better and better economics, and hopefully you get it to a good place. And I think it's that grind, and it's that combination of thinking creatively and then thinking rigorously. And it's hard, and I also think measurement matters. And I think too many folks on the marketing side, like I'm not a big believer in brand marketing, put it that way. And too many folks, when I say, what are you going to spend on Google? You're like, well, I'm going to spend $20,000 on Google this month. What I'm thinking to myself is every day, how do I measure? If I'm making money and it's working, let's ramp that up. If I'm lighting money on fire, let's either be testing something to make it better or shutting that off. So I think thinking in that 1% mentality on a daily basis and grinding out improvements. And it's very
I
liberating.
really like that. Excuse me.
And then I think part of that is you do that by testing things. And I think if you're not testing, you're not learning. I'm not Steve Jobs. I'm not going to come up with the next iPhone, but can I keep testing things? And even if I'm wrong 95% of the time, I can hold on to the 5% of things that work. And over time, you make some real improvements. I think it's a more sort of structured and predictable way to improve your business.
Jeez, there's a bucket load of tips there, Mike. We could write a book just on your answer to that question. But I love your opening statement, which was be 1% better each day, because that A, it makes sense, and B, it takes the pressure off. You're not all of a sudden trying to get a 100% return on, like, as you say, what marketing campaign works best straight off the bat. It doesn't. But so 1% each day is a lovely thought. You now own and run the financial management business PCM Encore. How do you view financial planning and portfolio construction these days, now that you've sort of got a bit of wisdom under your belt?
Yeah, so I think I told you before, I only go into things that I think are B's or C's for customer service. And that's really where I think this industry is today. And that's why I got into it for my own family, then for others. I think it's outdated. I think too many people are getting one-size-fits-all portfolios. They're really easy for the wealth manager to create and run, but they're typically not right for folks. So to me, this really it starts with really getting to know our customers and building the right portfolio for them. And it takes time. It's comprehensive. We use a lot of technology around that, but it starts by being personalized. The other
So
piece,
this is the overlooked problem that you identified?
I think personalization is a massive one. Too many folks, no matter what you say, 60-40 bonds, that's the portfolio. Every one of your
Yeah.
portfolios should look different because they're different. And it's not just their age and their assets. It's their goals, it's what keeps them up at night. Are you more concerned about missing out on a market rally, or are you going to stay up at night if the market's down and you feel like you're overexposed? Those things matter. And then the world's changed. We've got new sophisticated asset classes that really help drive returns and reduce risk and create more resilient portfolios. Real estate, private credit, infrastructure, private equity, venture capital. And I think this is an industry where the very best are doing this, the very largest allocators of capital, but the average wealth manager is sticking to stocks and bonds. And we know diversification is the one free lunch in economics. We know it's the one way to get higher returns while taking less risk. And now that we have 8 or 10 different tools to build portfolios, let's take advantage of all of those for folks.
With Hawk's Pest Control, getting to know your customer, which is really important to you, I would argue is probably easier. Whereas with PCM Encore, the customer, high net worth individual, possibly a little bit more prickly, possibly just wants you to get on with the job and is not interested in being a market research guinea pig. How do you get to know your customer intimately so that you can personalize a solution?
So I think the first piece is you've got to pick your customers. And for me, these could be 40, 50-year relationships. And I think you've got to have someone that wants your approach. A good customer of ours wants us to know all about them. They want us to know about the assets that we will not be investing for them, but are other parts of their portfolio. And I liken it to a doctor, the very best doctor in the world that just gets a quick phone call with you and you're describing your symptoms. They're not going to do well compared to the guy that's got the blood tests and the ultrasounds and all of those things. So really, we want to be that doctor. What is everything that we can learn about you that we can apply towards how we're investing for you? So I think it's finding like-minded individuals, and this is a business where, again, we're sort of getting married. So for there's not many pest control customers we turn away, but I think here you get to see, hey, are we a good fit for you, and make sure that's a mutually good fit. And then I think you've got to see, like, we're not doing this for ourselves. We have a rule, for example, a customer should never be asked the same question twice and never have to fill out the same piece of information twice. We're not there yet, but that's a goal. And I think if you're going to ask a lot out of your clients, it needs to be customized. The next question needs to be informed by the previous question. And we all know when we've been at the doctor and we're filling out the form for like the 5th time and we're just frustrated. And we're frustrated because they're wasting our time and we've already told you. I think if you have something where I'm adding value, we're asking the right questions, you can really see that we're valuing your time and you understand how that's going to translate into a better plan. It feels very different.
Some very good tips there, Mike, for an interviewer. Just taking some notes as you speak. You talk about pick your customer, which is a very brave statement for many business owners, because any customer's a good customer, they would probably argue. You're in a position at PCM Encore where you invite people to be part of, that business, which is interesting. It creates scarcity and FOMO, but it also obviously gives them an opportunity to make sure that they're right for you and you're right for them. Is that your strategy there?
Yeah, so when I sold assurance, we just made more money than I could ever spend in my life. I went to golf for a couple of weeks and I was
sorry to hear that.
But I went to golf a couple of weeks and I was miserable. And I said, hey, I love building companies. I love solving creative problems with really smart people. And that was the advent of PCM Encore. And it starts with, are we actually having fun? And that's a new filter I've put into all of my hiring, and it applies to clients too. Like, this is what I love doing. Why not be around people that are phenomenal? And I think you've got great employees and you've got great clients. You can build a really special business. And I think it kind of goes to fishing in your own pond. It's a big pond in America. There's plenty of wealth managers. There's plenty of clients. I don't really think that we're competing with anyone other than ourselves. So I don't know whether it's the best business decision, but in terms of my day-to-day enjoyment, I think it's a no-brainer.
What did your handicap get down to, Mike, while you were boring yourself?
It turns out I was terrible too. It turns out if you didn't pick up a golf club till your mid-30s, it doesn't matter if you put in a couple of weeks of good effort.
Sorry to hear that. Maybe you have to go back for another year or two and have a sabbatical.
Yeah, I think so.
Mike, I've thoroughly enjoyed talking to you. I'm sure those listening have too. There's been some great insights. And if people want to find out more and get on the invitation list, dare I say, they can go to encoreinvestment.com.
That's perfect, yeah.
Great. Mike, thank you so much. I wish you all the best in both business and golf and any other sporting endeavour you pick up. And to you, the motivated business owner, thank you for getting this far. If you feel a little bit brighter, thanks to this episode of the Small Business Big Marketing Spotlight, then you'll find more conversations with successful business entrepreneurs over at smallbusinessbigmarketing.com or on your favourite podcast app. Until next time, may you and your business shine. Thanks, Mike.
Thank you.